and welcome to the Australian Stock Market Show. We do hope you've had a great week and are staying safe. Thomas Jefferson once said, "The man who reads nothing at all is better educated than the man who reads nothing but newspapers." I think this quote is a good one for how we consume information today, thinking we are being educated when we're really not. Tonight, we'll take your education to a whole new level, so it's time to be ready to learn as we will cover many ideas, interesting topics and indeed stocks. As always, our aim is to educate and inform you as we answer your questions and bring you our upfront, no BS approach to all things stock market. Our main topic for tonight is investing in the top three commodities, lithium, iron ore and nickel. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Howdy.
How you doing?
Good. I should have a cowboy hat on for that introduction, shouldn't I?
You should, and have the boots and all that sort of stuff.
Yeah, boot scooting.
Talking about it. When I was in Nashville a couple of years ago, and I've never wanted a pair of cowboy boots in my whole life before, but we're walking down the street and every second shop is a cowboy boot shop.
You had boot envy, didn't you?
No, I didn't. We walked and looked at the boots because some of them are so beautiful and ornate and everything else. And my wife said to me, I got to get a pair of cowboy boots.
Yep.
I go, you want to get a pair of cowboy boots just because you're in Nashville and you're looking at boots?
For how
you're
long?
actually going to wear them at home. And can you imagine being at home in Melbourne wearing cowboy boots? Mm-hmm. And she looked at me and she goes, yeah, you're right.
Maybe 30 years ago you might have got away with it.
Well, I figured if she was allowed to get some cowboy boots, I should be able to get a guitar at the Gibson factory.
But then again, you could take her out to a farm or out into the bush, and that would be okay for cowboy boots, wouldn't it?
Well, it would be, but not for $300 cowboy boots. I'd rather have a pair of Blundstones from Tasmania.
All right then.
All right, but before we get into tonight's show, we're going to take some live calls on the show tonight. So if you're sitting there and thinking to yourself, hey, I'd like to ask Janine and Dale a question, then this is your opportunity to pick up your phone and call us now. So you can speak to us live on the show. Now, the number you do need to call is 0392909988. That's 03 for Melbourne, 92909988. So pick up your phone and get dialing us now.
Moving on, it is the 5th Tuesday in the month, and this means we have Dale's hot tip for you. So let's get into the charts.
What are you laughing about?
Because I changed the script to say Dale's hot tip instead of our hot tip.
Oh, God, because it's
You
my
love
hot
this,
tip.
don't you? You love this section.
Well, I love you giving me. Anyway.
Yeah, good on you.
Well, we did. I had last time it was Atomos. And that's up 50%. And I know before that I was talking about Life 360.
Okay.
And that's up a big hoot
Yes.
from that. This one I want to look at, if we're going on the screen, this one's called Anteotech. And I know it's a couple of people...
Anteotech, is it?
Anteotech, that's it. I can't even read that. Anteotech. There's a couple of others that I like around this space as well, but I like this one because it has been... It's a little bit dark horse. Mm-hmm. It is a lot of a dark horse, not a little bit. It's a lot of a dark horse like Atomos. It's too early to have right now. You can see here it's really, really falling away. So if we look at our little tool here, wherever it is, we can see there, if I put the lock on, we can see... Click on that, Dale. You're getting it too much. So you can see there it's down 69% at this point in time after, rising from all the way from like 2 cents all the way up to 50 cents. It's not a big stock. It is a small stock. But I think it's going to pull up not too far away. So I think it's probably going to start pulling up somewhere around about that sort of 12-cent mark around this sort of level here. So I think it will pull up. So it's not a buy right now. It's a watch, wait and see. Now I think, it is a volatile stock, as you can see. It's very, very volatile. Right now it's definitely bearish. There's definitely, if you look at it, if I bring up the weekly chart, you can see the volumes going through it now a lot more than what it was in 2019. So 2020 we got more, and you can see the biggest volume came through on these big spikes. But there's still good volumes going through it, even though it's going down.
Very good.
Now I know there's probably a few people here sort of trying to bottom pick, as we were talking about last week. And you know what happens when you start to bottom pick.
So explain the fact that the volume's still high. So obviously people are selling, but somebody's got to be buying.
Yep, every single share that's being sold is being bought by somebody. So who's actually buying? And I would suggest, and I'm not 100% certain. I mean, obviously last week the volume there is 13.9 million shares at just under 20 cents. So we're not talking about a lot of dollars. So there would be some bigger players probably just accumulating the shares. As the shares come onto the market, they're actually probably just buying up some of it, and eventually the people wanting to sell will dry up, and that's what's going to stop it falling rather than people continuing to sell. So through this period, we would have had people that bought through here and probably people bought through here starting to sell.
So how would they have sold? Well, you know, if someone was holding that stock and they're still sitting in it, how should they have got out?
Oh, look, follow our rules, pretty much. That's pretty much easy. So somebody buying this stock, I mean, you'd have to have really good rules on this stock. That's the point. But it's getting, the more volume it gets through, the more steady the trend is, or the more consistent the trend is. And this is why, you know, you and I constantly say to people, don't trade speculative stocks, because you can't pick the trends as well. And they tend to be a lot more erratic, whereas you can see now with the more volume through in it, the trend is a lot more stable. So if I go back and stretch that out and we go, here, have a look at that. That's just completely different, and yet nobody would have seen that on the chart. Looking at when I go like that, it just wipes out all of that really
that information.
Crappy time, doesn't it? So now it's trending better. So, I mean, if anybody trading this stock, you would have been at around 30 odd cents. You really would have been after that peak. But there's a lot of other rules you could use to get in and out of that stock. But right now it is trending down. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 18 weeks down. I think it's got a few more weeks down, but if I drew a line in the sand through here, somewhere around about there, so around about that sort of 12-cent mark, it'll probably start to find some support there, but that is not a signal to buy. I want to really stress that.
I'm glad that you emphasise that.
Yeah, too many people go, oh, Dale, you said this was going to go to this price, or this was going to go to that price, and it didn't do it. I go, no, it didn't. We just say it's likely to go between this level or that level, or it could go down to this price. But
it could go through that level that you've marked.
Yeah, it could go. It could go heaps further. So to me, it could even go down to right down into this sort of level, down to 1 and 2 cents. It really could. But I would expect it to a reasonable chance for it to find some support here, but just hitting that is not a signal to buy. It's a signal to sit there and watch and wait for confirmation, and using some rules around this stock so that you are buying it when it stopped falling and start rising. Because as we saw with A2 milk and Appen, people were jumping in those, and that was the subject of my report yesterday, because I saw a lot of people were talking about it.
There was a huge sell-off on A2 milk.
Both of them, huge sell-off on those last week after they reported, because people jump in thinking they're getting it cheap, but then it rises for a little bit, and it's really a false rally, or a sucker's rally in my book, because you get that, and you get the talk going on, it's cheap, it's A2 milk cheap, Appen's meat cheap, it goes up.
And there was talk of a
takeover,
bang, and it jumped up just after the peak. It had fallen for a couple of weeks, and then just the following week it had gone up so strongly on takeover rumours. And people got sucked in, didn't they?
They did, and I don't want people to pick this one right now. As I said, it could be a week, could be 2 weeks, could be 10 weeks. I don't know.
So be patient.
So just be patient. I was going to I was so keen on using WiseTech as my hot tip. Yeah. But I kept saying, okay, hopefully, I knew there was a 5th week in this month, and I go, WiseTech's going to be my tip. WiseTech took off a week or 2 ago. Yep. And that was one of the ones. But I know I have mentioned it in past, so WiseTech and Jumbo. And Jumbo was another one I was looking at, or JIN. It took off a week or so ago, and it's come back down last week, so I still like that one as well. But this was my little dark horse. All
right, thank you very much for that. This is all on that hot tip for now. So it's time we get into our first email for the night.
All right, our first email tonight is from Blair, who says, hi, adore the show and have subscribed and shared it on my Facebook to encourage others. My question related to your thinking on News Corp mining, gold and copper prices, and what happens, or what appears to be a benign inflationary outlook. Regards, Blair.
That's an interesting one, isn't it?
I know, you can do that, so I can have a drink.
Well, look, I mean, we've seen in the US that they're talking about this challenge about whether there's deflation or whether there's going to be inflation, how long it's going to take. The Fed are now saying that they're going to have it continue to with the current outlook for now. So what does that mean for gold? Well, we were aiming to get our resident gold expert on Flicks, but unfortunately he cancelled recently, and I think we've got him.
How could he cancel on you?
We've got him this Thursday, I think, which is going to be awesome. So I look forward to chatting with him about that. But it's interesting to see like Newcrest, which is on the screen there, was one of the biggest gold miners. It's in the top 20, believe it or not, but extremely volatile. You think to yourself, if I buy a top 20 stock, it should be relatively safe. This is the exception to the rule, and it's falling. So, you know, there is a situation we've got here where, okay, we don't have strong inflation and gold is actually falling. So that goes hand in hand, doesn't it?
Yeah, but there's a lot of talk about inflation in the US and in Australia, and I'm like, I can't see it.
I don't think it's the main. It's not the main driver.
No, it's not the main thing you need to be worried about.
It makes a good story, though.
It does make a good story, but I think, you know, interest rates are so low, it's not funny. And yes, prices of certain things are going up, like food and other things. Supply chain issues. You know, cars can't get microprocessors, those sorts of things. There's other issues.
Until the Fed turns around and says, "Hey, we're actually going to start changing the policy," I don't think that's going to change too much on gold.
No.
I think it'll eventually go up, but I just think there's potential downside risk right now.
No, I
especially
agree.
For
I agree. I totally agree. But with gold, there's a lot of talk around about gold because people are not trusting fiat currencies anymore, which is basically the Aussie dollar, US dollar, normal currencies. And how do you protect your money? And so there's a lot of talk around possibly having a cryptocurrency backed by gold that matches the gold price, that sort of stuff. There's a whole range of things happening. So I think there's going to be a lot of changes in this space over the next decade, I think.
Okay, so anything else you wanted to add to that?
No, just if you want to call Janine and I, just give us a call on 929-099-8888. We're happy to take your call, but let's get into the next email, Janine.
All right. Our next email is from Surin. Hi Dale, I've been holding FAR shares more than a year. Could you have a look and tell me about FAR's situation? Thanks heaps, Surin. Okay, now there was an interesting thing that happened to me when I went to look FAR up.
Okay, it was...
There was.
What? I'm not going to crack a joke. I'm not going to crack a joke.
Because I looked at the chart. In one instance, there was a whole lot of data there, and the next thing, the data disappeared.
It disappeared.
I contacted Optimo, our trusty people who are absolutely awesome in terms of support. But you were cracking the whip on me this afternoon, so I didn't have a chance to go back and see what their response was. But I don't have much data is the answer.
Wow, I don't know what happened here either because, if he's been holding it for more than a year, obviously the data's gone. But
he didn't give us an indication about what price or anything like that, so it makes it hard for me to make a comment. So unfortunately, I don't have a response for you.
It looks bearish from this chart, but that could be just a little bit of a pullback from that, but I'm not really sure. So
well, it's a big range. I mean, for a start, one thing we can add to this is the volatility of this stock. If you look at it, is huge.
That is massive.
What's that? You can't see my percentage. You got your glasses there.
I have got my glasses
you
on
better grab
here.
it.
Look, how about I fix it from all of that? But it does look a little bit bearish short term at this point in time. So it's
about 20%.
It's about 20% from all of that.
Just in a couple of weeks.
Yeah, and just this short term look at the moment, it's not super strong because we've been seeing it open here, close lower, open here, close lower. Currently, this is the 2 days of this week, so it opened, pushed up, come back down again, so it's likely to close lower. It's not bullish at the moment, so short term, I'd say stay out of it.
There's no direction, is what you're saying?
No, there's no real direction, so I'm sorry we can't be a little bit more detailed for you. Moving on, we do have a question from Craig who says, Dear Dale and Janine, thanks for your great weekly content. Now, I have a question regarding media. I have been watching the sideward movement for the past few months and believe if the price goes above the previous March high of $1.95, then it could be a buy. I also think that $1.95, it would break a trend line. If it closes below $1.40, then I feel it could fall further. Please let me know what you think and whether I am close with my analysis. Thank you for your truthful feedback. Regards, Craig. Isn't
Good on you,
nice?
Craig. Yeah, lovely.
But at least he's done analysis. How many people don't do analysis and ask us to check their analysis?
Yeah, I know, but I can't see much analysis. A couple of lines, I guess that's some analysis. Look, not wanting to be rude to Craig, however, a couple of lines on a chart looking at support and resistance is only a really small part of an overall analysis. And I know it's hard because I sometimes get comments from people that, we looked at your analysis on the show and I said, what analysis? We just looked at a couple of price levels on a chart because we can't possibly do the justice to the analysis that we know and the knowledge that we've got. We can't possibly put that on the chart in this space, and most people probably wouldn't be able to understand that in one session anyway. So looking at this though, Craig, I like the fact that he's identified levels. That's a start.
It's just support and resistance.
Yeah. So I would agree with him. If the stock went above that 195 level, I think that it's really could be a really good opportunity, and it means it's going up. And I like the fact that he's identified that 140 level as well, because obviously if it goes below that level, then it could be falling. I wasn't sure what he meant about the trend line, though. To me, that was a little bit confusing in terms of the way that he'd written that. I think that it's likely to cross a trend line. Yes, there could be a downtrend there and it could cross the trend line. Is that what he meant?
He says if it breaks above $1.95, it will break above a trend line, and the answer is no, not even close.
Well, look, I actually agree with him.
Do you?
Yeah.
Well, I don't.
Because I can see one there. I think you need to polish up your glasses just a little bit.
No. No.
You're saying it's because of the price, is it?
It's called a yen.
The peaks are so close together, is that what you're saying?
No, but I just don't think it is. Maybe not on a weekly chart. It probably on a monthly chart. If you look at the monthly chart now on the right, if I put a trend line down there, or rough trend line down there, you can start sort of seeing what we're talking about now, can't you?
That's a long-term trend line, but I can see what he's talking about.
He didn't say long or short, did he?
I can see what he's talking about on the weekly chart. I can see it. So I just don't know what your glasses are doing for you at the moment.
Well, I'll just disagree with you. Get your boxing gloves out.
I think you need new glasses.
Get your boxing gloves out.
Okay, our next email is from Anil. Dear Dale and Janine, I would greatly appreciate your... You gave me this one on purpose, didn't you?
Sorry, do you want me to help you?
Erudite analytical assessment of JHX. I'm not holding, however, and flirting on taking a position in at current prices. Thanks in advance for your exposition into JHX.
So you don't even know what that word meant, do you?
Exposition?
It just means expert opinion. That's what it means.
I don't know what that means.
All right, so we're talking about James Hardie.
But I think you gave that to me on purpose, didn't you?
No.
And you looked up the word.
No, I'm just going in order. It's okay. Now, James Hardie. We need to talk about James Hardie.
Okay, look, I think James Hardie looks like it's at a really important level right now.
Yeah.
So it has the potential to pull back for a little while. It could go up to about $56, $58 in the short term, but I think that would be the absolute max we would see this stock travel to in the short term.
Yep.
So that's really it. But I do like it.
You didn't even touch the mouse. That it?
No, I didn't.
It took him longer to type the email down. Is that all you got?
That's it.
Come on, girl.
Yep.
Must be more to it, I mean, from that point of view. So you're thinking it's bullish and it's going to keep going further.
That's right.
Okay, well,
in the short term, but there's a downside risk right now because it's at a really important resistance level.
Okay. So what are you saying? Wait.
I'm not saying, if you're not in it, you wouldn't be buying it. That's what I'm saying.
But that's exactly what I said. You're saying wait. No, we just use different words.
Well, you keep asking me questions, so we finished here, haven't we?
Well, our viewers want to know that. They want to know the duck's guts, basically. They want to know the serious stuff about should we buy.
So do you think it could be coming back to a trend line in the short term?
I think there's every possibility for that.
Okay, so would you be buying?
No.
Right.
I'd be sitting back. I'd be waiting.
Thank you. Case closed.
Cool. Now, before we get into the topic later on in the show, we will give you another opportunity for you to call into the show and ask Janine and I a question live on the show. So remember, grab your mobile phone out and stay tuned for this opportunity when ready to dial, when we tell you to call in towards the end of the show. Now, okay, Janine, it's time to get into tonight's topic, investing in the top 3 commodities, lithium, iron ore and nickel.
With many lithium stocks up well over 100% this calendar year, commodities and rare earths are providing investors with exciting growth opportunities as global demand for lithium grows. Iron ore and nickel are also set to heat up this decade, and as such, smart investors are wise to have exposure to metals related to construction and the production of electric vehicles. As a push to cleaner technologies continues to be supported by more governments globally, it's not just the growth in EV sales, though, that's exciting. It's the growing demand for grid power storage that's also creating a lot of discussion. All of this activity supports the view that there is a huge opportunity for investors to profit from companies operating in this space in the coming decade. And tonight we'll share our view on these important metals and the opportunities to profit, as well as how to minimise your risk when buying.
Now, I need to stress that you must do your own research before you invest in this area so that you really understand the gravity of the situation. Now, in the time available on the show, it's really not possible to cover this topic in as much depth as we would like. So the important metals involved, remember, these are lithium, nickel and iron ore, and if you watch the show each week, you will recall that we covered our view on iron ore in a recent show, so we won't go into this again tonight.
Two key commodities used in the production of the batteries for EVs are lithium and nickel. Now there's a lot of talk about the role iron will play in the EV market and in providing power storage for the grid. Imagine banks of batteries covering multiple football fields in Australia. This is the future of power potentially, and UBS estimates that the lithium market in particular will grow 8 times by 2030. What is interesting is currently the growth in EVs appears to be accelerating. The global EV car market grew by around 40% in 2020 compared to 2019 figures, and registrations of electric vehicles doubled in Europe in the same period as governments around the world moved to support cleaner technologies to cut emissions.
Now, a recent article on the Forbes website revealed that UBS projects electric vehicles will make up nearly half of all new car sales by 2030. Now, this is a big target given that electric vehicles currently make up around 4.6% of all cars sold on the global car market. Wikipedia reported that plug-in electric vehicles were only around 1% of passenger cars. Now, it may not surprise you to learn that China is the leader in electric vehicle battery construction with 70% of the market, followed by Europe, which is building more production facilities, and there are significant technological advances going on in the battery space. Do your own research again into the business between Tesla, Elon Musk and China. What is really exciting is Elon Musk's view on iron-based batteries and lithium iron phosphate cells for storage, which will help bring the price of storage batteries down.
You may have observed that supply and demand issues caused the price of lithium to decline heavily from a high in 2017 to a quarter of its value in 2020, where a reversal occurred on the price chart, and the price of lithium has been rising steadily since. Eventually, you get a supply and demand squeeze, and more mines have come online since the price has been in recovery. Let's now get into the charts briefly and have a look at the supply-demand curve.
Okay, so on the screen.
All right, so you can see there that these are all the theories behind what they're expecting the demand to be. Okay, so you've got the supply to be. So here's the brown line here. So this is a base case of what is possible.
Yep.
But the fawn line is what's probable. This is the supply side. And it's also possible that more mines, as they come online, could actually create a curve that means that there's a higher supply.
Yep.
But what this is really showing is that demand is going to outstrip all this. So demand is going to continue to rise in this fashion over time until we head to 2030 and beyond. So to me, that sends a really strong message to investors that, you know, this is something that's not going to go away in a hurry. So that's the first one that we need to look at.
Okay, so what's the next one you need to look at? So, you know, so we know that supply and demand equation will impact price. So let's have a look at a price chart of lithium now. We're going to bring that chart up for you now. So this is the lithium price chart, yeah? Yeah,
so this is a rising lithium price we can see there from around 2016. It rose all the way into a high in 2017, as I mentioned before, and then it fell away into 2020. So we've only just started to see a recovery more recently with the price of lithium rising. Now, don't be too concerned about the different colours there. It's just the overall shape of the graph that's really interesting to see. But lithium's nowhere near what it was when it was in its heyday in 2017.
What was
and
that?
well below what was typical prior to that, even in 2016. So it's heading up in that direction at the moment. So that chart was, it was I think produced a couple of months ago. So lithium could be slightly higher than that, but it's just indicating what the direction of this commodity is doing at the moment.
It's not mobile phones, it's cars.
It's all sorts of things related to, because lithium is so light, and that's the quality of it, isn't it? For electric vehicles and for power tools and phones and all sorts of things that it can be important for.
Oh yeah, I mean, how much stuff have you got that it's powered?
But the electric vehicles are the big thing. Like in terms of the total quantity of lithium used and where it ends up, the electric vehicles really do require a lot more than what, say, phones and power tools and things like that require. Yeah. But as the price moves up, that will change the equation, because the developers of all different technology are looking for ways to change what the raw materials are that are being used to change the pricing structure of things. So electric vehicles are coming down in price.
Yeah, I know that's the case with a lot of things. It's like if lithium gets too expensive to put into batteries because the demand is so high, there'll be other technologies that'll be cheaper.
Yeah, but the problem too is if lithium falls too far, then the mines go offline. So eventually that supply and demand equation changes, and that's what has really happened with the fall of the lithium price. But as the lithium price has started to rise again, more mines are coming online, and there's opportunities out there for that.
Okay, cool. So that's it for the charts, is it?
That's it for the charts.
Okay, now a rising lithium price is good for Australia as the largest lithium. You gave this to me. Spodumene.
I could have just said lithium.
Reserves in the world are located in Australia, and there are many lithium miners listed on the ASX to allow investors to gain exposure to this metal, and we will get into those in a moment. Now, there is so much we could cover with lithium, and so we've decided to briefly mention nickel, which is mainly used in stainless steel making, but it's also a vital ingredient for the lithium-ion batteries used to power electric vehicles. Nickel is also forecast to significantly increase in value. So when you do your own research, look for good stocks with nickel interests.
The challenge is not all companies with interest in this space will be good investments. So how do you find good companies in this space that will generate great returns at an acceptable risk? The first thing to do is take a look at the charts of some of the lithium stocks for ideas on what to look for and how to manage risk when investing in these stocks. So that's the first place. We need to look at the charts first.
Okay, so let's go to the charts. Is that
Yeah, that's what I'd like to do. So what I did is I looked around at where can I get a reliable chart that tells me what's really happening with the lithium price, first of all.
Yep.
And where's that reflected in? Where are some of the companies that are trading out there? Where is that information reflected
So
other
you
than
look at
just
an
a stock
ETF.
chart? So I thought I would look at an ETF. Yeah,
Okay.
You're just trying to cut to the chase, aren't you?
Well, I'm
Was
just
I
thinking
waffling?
I'm an intelligent person. I thought, where would I go? I'd just go to an ETF because it would be a mishmash of all of that, what you just
Your
said.
ears are way out here at this point. Okay, Global Lithium ETF, LIT, right? This is on the Australian, the US market, sorry. Okay, so this gives you an indication of what's gone on. Now, looking at this chart, I'm expecting that lithium, this chart of lithium is going to top out somewhere between 90 and 100 US dollars. So that's the expectation at the moment, and it's almost there. So $90 is just, if you can see on the left-hand side of the chart, I'll put the crosshair across. We can see that it's just there, and it's just below that level at the moment. So that's in the short term. So there are going to be challenges here for investors to judge this because the supply and demand curve will change in the short term. We've just looked at a long-term chart.
Yep.
So if someone's thinking long-term, then it's not a big issue. But if you're looking short to medium term, then you really need to be much more careful and wait for those pullbacks in price and not just jump in at any time. Like this is really well extended, isn't it?
It is very, very well extended. But again, you're saying long term, this is good for the next decade.
I'm saying that, yeah. So look, if we're looking at ETFs battery, this is an ETF in Australia, so it's ACDC. Don't you love that? All those metalheads out there.
It's high voltage investing,
High voltage
isn't it?
rock and roll. Okay, so you can see there's a strange sort of pattern formation that's occurred on the weekly chart there. Now, when we teach this sort of thing in our course, then you'll know that the stock or market could be very close to a top. So I'm just putting together some of the pieces, looking at the US chart, that's quite extended, looking at this chart. Well, this could go up more, and we're at $96 here on the right-hand side. It could head to the $100 mark. I wouldn't be expecting it to get too much more above that, given the pattern that we're seeing on the chart there. And I know you don't like me talking about gaps too much because then it creates all sorts of questions because gaps are really, not reliable. It's only such a minor
Come on,
part.
keep moving on.
Yeah, I know. I thought you'd say that to me.
Keep moving on.
But if this price falls below, the price of this ETF falls below that low on the week ending 23rd of July, so that's around 87.90.
Yep.
Then we know this is going south for a while. So this is where the opportunities will be. So I'm saying to people, just sort of be there, lay in wait, watching to see what happens. Don't be too busy trying to rush into these things. Just understand the chart and watch it for a while first to get a good idea of direction.
That's a really strange pattern considering lithium's been bullish this year.
It is.
And it's just been going, that chart's
And
been
everything
going
I'm
sideways.
reading, it's saying that, this should be huge going forward. But then when I looked at the charts, I'm thinking, well, technically it
going on?
looks like it could be extended already.
Is it a case the big players are all in and they're telling everybody else
what
to
it
get
is
into
we
it?
know the stock market factors things 6 to 12 months in advance, and I think that's really what's already happened. It started to do that. Yeah.
All right, so what's the next stock you're going to look for, the chart?
Okay, so the next one is Dow Jones indices. We've got the commodity nickel index. So we talked about nickel, so this is really the only nickel part of the conversation that we're going to have here. When I looked at the chart, I thought it's a hodgepodge. It just looks, that's a technical term, by the way. So it just looks like an extremely volatile commodity to be in. But it has good runs. So this, when you're looking at the monthly chart and you see these big swings, this can be really good trading if you can get on a stock that can replicate this index as closely as possible. It's going to be more reliable if you find a stock that follows an index reasonably closely, or a price chart of an underlying commodity.
Okay.
So we're seeing here that just recently it's challenged this high on the weekly chart. You can see there, so that high in February 26 we came up. It's just stalled a little bit. It may come back. If it falls below 400, then I believe that it's heading south. So, you've just really got to watch that. But if it takes off above this high, well, gee, that's sky's the limit. It's taking off, and that's a really positive thing for this. Because I have seen some mining stocks do this sort of zigzag formation over time, and this is like a basing pattern that when you eventually see 10 or 20 years down the track, that'll look like nothing.
That'll look, correct, it will.
It'll just look like a zigzag at the bottom of a chart, and this could be setting up for a big move out of that. But as I said, it's always caution to the downside, because the risk is still there, especially given the volatility of this of the commodity space. And look at the fall that we saw here in February this year. So that sort of thing is not uncommon.
Okay. All right, so now we're going to look at some stocks, are we, in this
Yep,
space?
so let's keep going. And Pilbara Minerals is a really important stock in this space. Now, they're becoming a significant player in lithium supply in WA, and as you can see, the market's already seen that opportunity and responded. We can see that ideally the time to be buying this would have been when there was this breakout of this sideways movement here. So there was some indecision, as Dale was talking about earlier on an example of a stock that we were talking about was FAR, wasn't it, where we didn't have much data. When you see these sideways consolidations that happen where you get a number of bars all consolidating in a row, and I'll just expand that up, and then you get this breakout, that's often a really good time to purchase a share. You've still got to manage your downside risk, because stocks can flip and then reverse the other way when the market's playing games. But looking at this here, it's sideways at the moment again. So we just have to wait and see what the next move is for Pilbara Minerals. It could keep going straight up.
It could.
While it's got that momentum behind it, it's possible. But any move to the downside, you have to have a cautionary note on, because there is a gap there on the weekly.
Okay. Cool. And the next one?
All right, next one. IGO moved from a gold area, a key gold area, and I thought that IGO was a great stock from the point of view that it's so interesting, because this sort of sideways movement looked like Qantas, at some stage. It was just very choppy. But then,
it's typical of a cyclical stock, though.
Yeah, but then look at this huge volatility after the low. So let me just expand this up for you. So this low here in 2016, the last stock that we looked at, remember this volatility up and down trends, means it's a really good trading stock short term, but COVID hit obviously, and that corrected it, and then it rebounded significantly with this emergence into these new areas. So a focus on metals, key to energy storage and renewable energy. This is going to be a big area going forward. So I really like this stock. Good trading stock. I'm not saying it's a buy and hold. I definitely wouldn't be. It's not for the faint-hearted, that's for sure. But it's an interesting one to watch, definitely. But let's just quickly have a peek at the weekly chart. So the same story. You've got to be laying in wait. I think if it goes through that high, it could keep going.
Okay.
Downside, if it goes below this low, then I would just be very cautious about it and just be patient and wait. So that's an interesting one there, but I do like this one.
Okay, so we've got a few stocks to go through, so we're going to go through them a bit faster now, aren't we?
Okay, lithium projects in Argentina and US for Argosy Minerals. So this is a really huge concern. There's some really great deposits of lithium over there, and that this company has actually got good exposure to all of that. I actually really like this one, but the liquidity isn't great.
Not there, isn't
okay,
it?
so
Yeah.
this is going to be a higher risk proposition to be looking at those bars on the chart. And it's gone up for so many weeks. The entry would have been somewhere around 12 cents and it's already taken off from that. So right now, to try to get into that, you're taking extremely high risk. But
I think you'd really need to know what you're doing.
You do, but I think it's really important. Look at what it's done in the past when it's taken off. If we look at this low here in August 2017, it just rips up for a number of months.
Cents, yeah.
It could do the same thing now. That's the thing that I'm watching at the moment.
Okay, Min?
So Min is an interesting one. Mining services and processing. There are always companies that need to be behind these other companies to support them. And so mineral resources could be an interesting one. I like the pattern. It just goes up, sideways. This is reliable, but the recent correction that we've seen on the stock has changed the game a little bit for me. So I just think that right now it's not the one to be watching, but I think it will at some stage again. It's already shot well high of where I was looking. So Lithium Australia, LIT, supply ethically and sustainably sourced materials to the battery industry worldwide, right?
It's also illiquid, isn't it?
It's also illiquid, but I do like the way this one's setting up as well. So if this takes off through that high there, I think this could be an extremely good trade, but then you're gonna have to understand it. You need to watch this stock prior to trading it to understand how much volume's going through it.
Yep.
How much am I planning on putting into the market? Am I likely to move the market? How can I trade it in that situation?
How do I get out?
How do I get out is the key question. So looking at what it's done in the past, I'll just go back to that pullback. Learn from what it's done. So we can see this significant pullback here over a number of weeks. There's no exit on the weekly chart and it fell all the way. This is where these smaller stocks don't always respect the normal rules on the weekly chart.
Oh, they don't,
Yeah, so you might have to go to the daily chart to manage it, but that's fallen 50% in that period of time. So there must be a way to get out of it on the daily chart, and that's what you've got to start investigating, and understanding how these stocks work.
Okay.
Okay, so that's lit. Next one we've got is development of one of Chile's high-grade lithium mines, which is Lithium Power International. I think this is interesting as well, but I'd be a bit concerned about it if anyone was looking at taking a trade on this, there's a potential opportunity when it goes through this high here, because this really just confirms that it's continuing to go up. That's all it's really saying once it goes through that high, because right now we don't know that it's going to do that. It looks like it might, but we don't have confirmation of that. So once it gives a bit of confirmation of that, then the challenge is across here. We've got resistance 42 to 46 in that zone. It might get stopped there.
Wow.
And that's the risk with the medium-term outlook if you were trying to trade this medium term. But I actually like the shape of that one.
You've outdone yourself today. You've got all these stocks. This is your last one, by the way.
Oh, Piedmont is not actually my preferred. It's a really well-known lithium stock, right? And it's one that all the brokers talk about. But the challenge right now, and it's come back really nicely. So, look, there's a potential if it trades up, we might be able to get a trend line in there at some point. But because it's only trading at around $1, this is a challenge. Stocks that trade below $1 often get shunned at in certain circles in the market. So once it gets through $1, it might actually become more interesting to different players out there. But, it's still a higher risk proposition either way. I'd like to see a trend line in there and a really nice strong move up before taking it, or at least, probably a move above 96, I think it is 96 or 98 cents before that would be interesting. And I'm just trying to sneak another one in there. Vulcan Energy is the last one on my list. I like this one, and I think it's really volatile.
This is Janine's hot tip. Forget about Dale's, go for this one.
Yeah, if this one falls below this low here, then it's high risk situation, because it could just take a dive back into the zone of that sideways move. If it keeps going up, I think this one could be a good,
The other thing, just as we're finishing up now, is I just think this space is probably also ripe for mergers, acquisitions,
Absolutely.
takeovers, huge over the next decade.
Yeah,
So
look,
just
think
watch out.
about BHP and Rio and where they're going. I mean, BHP's just moved out of moving out of oil and gas.
Well, that's where they need merger
So
with
look at
Woodside,
what,
yeah.
So they're still going to have an exposure to it, but I mean, think about where their long-term direction is likely to head to, and they've got iron ore, which is going to be huge in terms of the energy
And we know
storage.
iron ore is going to be bullish for a decade. We're going to be pretty positive on that one, but that's okay. It's all from us on lithium. Now, before we get into our next email, if you have your phone ready, and I do hope you have your phone ready, and you've been patiently waiting for the opportunity to call in and talk to Janine, because you don't want to talk to me, and you do have a question and you want it answered on the show, it's really now time to get dialing. So the number you need to call is 03 for Melbourne, 92909988. That's 92909988. Now, while you call us, we'll get into answering the next email. Okay, the next email is from Kevin, who says, "Hi, Dale and Janine. Once again, thank you for all your great work. Question I have today is I'm looking at buying Orocobre Limited, ORE. I've been following for some time now. On the 19th of July, it was selling at $6.76, and then on the 12th of August, it was at $9.96. And as of today, the 24th of August, it's currently trading at $9.30. I've been waiting for another correction, but it seems to be trending up again. The company has also merged with Galaxy Resources. So I'm wondering if you think it could break through the $10 mark and continue. Would really appreciate your thoughts. Cheers, Kevin." Now, Orocobre is also into lithium, isn't it?
Orocobre, I was looking at putting this one and Galaxy onto my list, but when I saw it there as one of the questions, I deleted them out of my list.
So you can cover others.
I knew I was going to be having to do a sprint to the finish line.
You're sneaky.
So I thought, great, we get to cover it anyway.
Orocobre.
I really like it. I think that in looking at, he's missed the trade.
Yep. He has missed the trade, yes.
You know, where he was looking at it around these levels here, so I'm just going to expand it up here. And I think he said was back in July, was it?
Yeah, let me get to my little tip here.
Yeah, so that was a beautiful little entry there. I guess from my current perspective on the stock right now is that, you know, if I was looking at this stock and analysing it, I would be, you know, very cautious about entering it now, given that it's just extended so far from that point.
Yeah, he was looking at sort of at 676, and obviously it's taken off and it's continuing to take off. So again, you know, is it going to get through $10? Yeah, eventually.
Look, it looks like it could.
But
that's the challenge, isn't it? It's about the risk, really. It's about risk. And so, you know, what risk are you taking? So if someone was wanting to trade this and they took it once it went through $10, how much risk is there in the trade? Well, you set a stop loss, but you always have a look just to see what the last low is, and it's 18% away.
It's a fairly big risk.
So it's a big risk, and there's a potential it could go through it. But then again, you have to decide yourself how you're going to manage that exit, and, you know, that's really important for any trader, isn't it?
But it is. It's so important. I mean, how many people they just want to buy, but they don't know how to sell?
Yes.
I mean, it's the biggest thing that when we research people, what do you want to know? And they go, I know how to buy, but I don't know how to sell.
Oh, look, I've met a lot of people that were trading around the time of the GFC. When the GFC hit, they thought they could trade, and it just changed everything for them.
Because they don't know how to sell.
Yeah, so we had these guys who were full-time traders come to us, and we gave them the structure and the strategy in terms of how to sell properly. And, you know, it's some of these guys told me later that they just take 3 months of the year off. That's what they do. Once they get to a certain level in their account, they go.
Yeah, that doesn't surprise me at all, but it's interesting. I mean, it's like if people were sitting there watching us tonight and they're going, if the market crashed tomorrow, what would you do? And if they don't have an answer, then maybe they should find out.
A lot of them would panic, of course. but they've been listening to you too much, and you've been telling them the market doesn't crash overnight.
Well, it doesn't, but you still need rules around it, don't you?
True.
Okay, so I'd say that's enough for Orocobre, is it?
All right, now we have another question. This one's from George. Hi, Dale and Janine and team. I've had to revert back to the monthly and weekly charts after my crystal ball stopped working yet again. Ha ha ha. Would greatly appreciate your views on Cochlear, watch list only, that's what you're saying, and the current pullback. As $211 appears as my first marker, then 200, then 180 to 185, and would be a little surprised if 160 is reached, but you never know. until it happens. Always enjoy your logical and rational content. Keep up the great work. Thanks, George.
Cool. Well, let's go on to the next
Well, that's a
one.
good. You've just been slacking off there.
I've
haven't
been
you?
slacking off. I was
You're
just
twiddling
thinking.
your thumbs.
No, I want somebody to give us a call so we can say hello to somebody.
You're just waiting.
Sorry, 92909988. Call me now and say g'day.
Look, I really like, this is another person who has been looking at levels, and I really like some of these levels that he's raised. And I only put 2 on there because I think, you know, you can get a bit crazy on a weekly chart putting so many levels on, and these are the really critical ones. So I guess if the stock fell through $200, I'd say it's all over.
You can use the pointer and everything.
It's more like,
okay.
Can I?
You can use the mouse, that's fine, I don't
Jeez,
mind.
you're so kind.
Yeah,
so that probably explains it a bit better, looking at this across here. So once that level is breached, then we're more likely to see Cochlear head south, aren't we?
Correct. Correct.
And so that's what he's really saying. But, you know, this stock would need to get through that all-time high to prove that it's going to continue to go up. There's just no other way of looking at it.
I mean, obviously it's bullish, a tiny little bit bullish this week after bearish so much the last 2 weeks from here. It's coming off here, so...
It's only Tuesday. Like it
but
could,
it is only
if
Tuesday.
it goes up the first couple of days of the week, quite often the stock will turn down at the end of
That's
the
what
week.
it did last week. The market was up Monday, Tuesday, and then Wednesday, Thursday, Friday was down.
And we could be about to see a repeat of the same.
And the same happened the week before as well.
Yep, stay tuned. Watch the banks closely to see what they do.
It's interesting how the market does go up early in the week and then comes down later on in the week. So if it does find support around that 200, 210, great. If not, just stay out of it until we get some support. Next, we do have a question from Stephen who says, "Hi, Dale, I'm recently new subscriber to your channel. Well done, and have been reading the book Accelerate Your Wealth with great interest. In April this year, without the benefit of your chart analysis, I bought into Unity Group at $2.59 in April and have seen a 63% increase in that time. It's currently $4.23 as I write. So applying some of the learnings from your book and YouTube channel, it seems that UWL is looking pretty good at the moment. Do you agree? Many thanks for your insights. It's definitely changing how I should be looking at my portfolio. Cheers, Stephen." Thanks, Stephen. That's nice.
I really loved Stephen, I loved your email because I just thought, I guess anybody could look at that chart and see it's going up.
That's massive.
You know, they don't need your book to see that.
No, you just go, yeah, it's going up. Even a 3-year-old could figure that one out.
Yeah, but I love the way that he wrote the email. I thought that was gorgeous. Anyway.
So how does he manage it? He's in it?
I think a trend line's perfect on a stock like this where you've got a really nice trending stock. It's absolutely great. You can just see that angle of that trend. How about I bring
orderly. Up you've got an aversion to the mouse tonight. What's going on? Do you want me to sanitize it or something?
Oh, don't even go there. Cheapest.
It's like, geez. So obviously you can see it's moving faster and faster. It's going up, this whole trend at the moment. So, and again, it's moving up even faster again. So eventually it's going to run out of steam. And people who watch my weekly Monday report, you'll know when I start doing this, if we get 2 of these pivots, really starts to run out after the third one. Generally. Yeah. So right now it's getting steeper. So right now at the moment it's still pretty good at this point in time, but I would suggest it won't be too much further down the track before it's going to start to find some resistance. But I like what he's done at the moment. But just use a trend line, but probably better off using it on the monthly chart, mate, if you've been reading my book. But look at that, it's just straight up.
Yeah.
It's completely straight up since November last year. So there's not one down month.
Wow,
interesting,
that's an awesome
isn't it?
stock, isn't it?
Yeah, so I do like it. So well done, even if I can't take credit from giving you the rules to buy it from my book because you bought it beforehand.
Well done,
Stephen. We'll help you sell it and protect your capital and protect your profits.
The next question we have is from Jim. "Hi Dale and Janine, could you please have a look at ResMed? Having missed part of the recent run, it's looking bullish and has favourable market conditions for the company to take advantage of. I missed it having triggered an entry rule in June, but I'm still looking to invest now. How do you see the chart? Thanks, Jim." Good question. All right. So Jim's got ResMed, really interesting stock, and this is just blown off it. So what do you make of that? Do you think that this is the end of the run? It's hit $40. You know,
well, generally, yeah.
That's an important number. So it could be that ResMed has had its last run. It's got a huge gap on the weekly chart. Doesn't mean it will come back and fill it, but in a lot of cases these things happen. So,
well, yeah, when you get in these big moves, it's people jumping in, and that's an exhaustion phase, really, isn't it? But have a look at this. The volume's dropping off a little bit the last few weeks. If you see this, volume's dropping off a bit and it's still going up.
Yeah, and
Which
so
is,
yeah, the fact that the volume's dropping off is adding to the view that it's slowing, potentially slowing. But we haven't really seen that in terms of the bar direction yet.
No. I mean, last week it did close lower than it opened, but yeah, so it's, I mean, yeah, I don't know. I wouldn't be getting into it right now.
No, it might be its last run.
It might be its last run there, so you'd be getting in at the last period of time. But yeah, so nothing exciting there. Move on to the next question, they say. Now we have a question from Anna who says, "Hi, Dale and Janine. Could you please analyse the chart for Pact Group Holdings? I purchased these shares in 2018 and are not sure they are worth holding onto. Thank you and really appreciate your input. Regards, Anna." So Pact Holdings, let's have a bit of a look at that one, Janine.
All right, so we can see this looks really nice actually, the way that it's unfolding.
Been through the roller coaster.
It has, and it's just been going through this period here, all the way from March through to, July. It's traded sideways, and then we've seen a breakout of that move. Now, this is what I was talking about on a previous stock, and I can't remember which one it was, but sometimes you get these moves up and then the stock will come back and settle. This is a big reversal last week, seeing that. It doesn't look great. Like, it was just looking so nice the way it broke out, and then just to see it stop in the tracks is just probably a bit disappointing for some people who were looking at this share. So I guess I would be watching this quite closely right now. If it fell back below that low or a trend line, then it would indicate that, you'd have to... it may be coming back to give us a proper trend line underneath here at some point, but you can see there that this low is actually at $3.37. I know it's a long way away, but given how far this stock reversed, let's have a look at the percentage move. That's a big move to move down 12% in 1 week. And if we saw that happen again, it could be all the way back down here. So right now we just need to see it settle down and then for the stock to start heading back up again. But there's a potential for this share to go all the way to around 540, 580. It's a possibility. Okay. Just looking at it without doing an analysis on it, full analysis on it, it's just a visual thing. Because people think that we're just doing an analysis, right, by looking at sort of natural support and resistance levels, but that is so far not. It's only like a very small percentage of what we look at.
Every man, woman, dog and child knows natural support and resistance levels, which is why they're so inconsistent. Because it's like, well, of course.
You can't trade with that.
No, you can't trade with that, but people do. They think they're the bee's knees, but it's not really the way to trade. It really isn't. But anyway, I think people should give us a call. Give us a call on 92909988. Now, I'm going to sweeten the pot for people that give us a call.
So, how are you doing that?
So the first person to give us a call, I'm going to give a free copy of my book too. So if you ring 0392909988 now, I'm going to give them a free copy of my book. Would that be nice?
And what if they've got it?
Well, they have a second copy.
To give to somebody.
Well, it's a good Christmas present. Christmas is coming up. 92909988. That's where you got to ring.
Actually, I was talking to someone recently about this, and they were going to get their children involved in the stock market. It's a really good introduction for children, I think.
I actually know a few parents that do that, and they love it because the children really get involved in it and they learn it.
Yeah.
And it also bonds the family a lot.
Look, I tell you a way to get them interested in it. Start a portfolio for them.
Well, that's true.
And tell them what it means. If it goes up, they'll be saying to you all the time, "Oh, can I have some of that money?" Won't they?
Cool. So ring 92909988 and you'll get to speak to Janine and I, and you'll get a copy of my book. So do it now. Janine, next question.
All right. Next email is from Adrian. Hi, Dale and Janine and crew. My question of interest tonight relates to gaps in charts. When are they interesting, relevant, and something I should take notice of? We've just been talking about that. Is it the same for gaps up and down? And what about gaps that appear on daily but not weekly, or weekly but not monthly? An example, if you would be kind enough to look at the chart, would be Bavaria Solutions. I'm thinking I should stick to the top 20 or 50 by market cap with this strategy and wait to read your second book. Thanks, as always, Adrian. So he's going to read your second book.
Is he? Oh, cool. That means he's read. It implies he's read my first one, so that's good.
Now, the interesting thing about this share is the huge gap that we've seen on the price chart.
Well, I was about to say, gaps are, for most part, they're not super relevant to most people, but it's also got to be taken in context of what's going on. Why did they gap? That's what, it's not just looking at a gap on a chart and going, this is what it means. And so much in trading is about that, is how you interpret that. And I know a lot of people take stuff that we talk about out of context. They go, Dale and Janine said this, or Janine said that, Dale said that. and they actually latch onto a word or two, and then they go, that's what it means, and it doesn't. It's about a whole context of things. So in the context of this, a big gap like that's huge, isn't it?
It's not a little gap. Normal gap. Yeah,
it's definitely not a normal gap. Something's happened to cause that big time, whether it's an announcement or something like that. And I haven't even looked at Bravura to understand that.
So sometimes it can be that there's been something that the market absolutely just disdain. There was disdain from the big players, and they've just dumped the stock completely, and that can cause the share price to drop. Sometimes it could be that there's been some sort of corporate action, right, that's occurred, and there hasn't been an adjustment to the chart. That can be the other thing that can cause that. So you're right, do the research, have a look at why that's happened. But I would say that there'd be people who are sort of in the greedy camp who would be looking at that and thinking, oh, maybe I could buy some of that because it might go back up again.
Well, they would, and they'd be trying to bottom pick.
And that's just crazy stuff.
That's just that's
you
not
set
wise.
yourself up for failure doing that sort of thing.
Well, you can. I mean, and the thing is if you focus on gaps, then you're missing so many other things too. It's not just about looking for gaps as well.
Yeah.
So some people will focus on certain things where it's actually looking at
But what does
everything.
a gap mean? I mean, it's obviously can mean a change in sentiment about the stock. And all of a sudden, there's been this change in view, and so somebody's dumped it, but it could relate to the liquidity of the stock as well.
All right, that's it for Bravura Solutions. Now we've got a call from Stephen. Stephen, are you there, mate? Hello, Stephen, are you there?
I am here.
How you doing? You're a good-looking fella?
Yeah, I'm a Geelong boy, that's why.
Fantastic, buddy. Have you got a question for Janine and I tonight?
Yes, I do. Look, you talk a lot about looking at the trend lines on the charts, on the weekly and monthly charts. What other things should we be looking at when we're considering a stock for investment?
Wow, geez, how long have you got, mate? I think, geez, that's hours, isn't it? Really, it's sort of like Geelong's backline. It wasn't working last Friday night, was it? So
no.
You've got to have a lot of things working together so you can kick more goals, not just have a forward line. So you've got to do both, but. You want to ask Stephen a question?
Years ago, when people were studying with us, I said to them, produce a checklist of your analysis, because we teach a lot of things, and when it comes to putting the analysis together on the chart, that checklist could be, quite long depending on how you frame it. So it's all about things like to do with the trend, buy and sell rules, stop losses, looking at the action of the bars, the price, the way that the bars move. There's just so much, remember we talk on the show about price, pattern and time?
Yes.
It's all that. It's all of the techniques that we teach under those headings that pull it all together so that you can do, your overall analysis. And it's about checking off that you've actually done all of that, and so that you've got the full picture, so you can understand when a stock unfolds in a certain way, why does it reverse at a particular level? Why does it turn around and find support and then start moving up at a particular level? Why does it go up at a particular angle? And why does it turn at a particular time? So that all of those things, and the shape of the overall chart, unless somebody explains to you how to understand the way a chart looks and how to read that, you just be spinning your wheel for years trying to work that out if you don't have it in a proper structured format.
Yeah, look, I agree. It's very much about price, pattern and time. It's about those support and resistance levels. It's about other price levels, because the market unfolds every day and it unfolds in price. But it makes patterns in those times as well. So you need to understand that. And to keep the football reference going is other teams have worked out Geelong just plays around and goes around sideways all the time. So they've worked out that's Geelong's pattern, and then they're using that against Geelong. And Melbourne did it the other week, and obviously Port Adelaide did that on Friday night. So that's the thing. You need to work out the stock's pattern. What is it doing in price, pattern and time? So how is it unfolding? Does it have certain runs of certain dollar figures or percentages? So there's a whole range of things that Janine and I are always putting on charts. So what we show on the show is really just, you wouldn't even see a scratch on the surface of how little we're actually doing in terms of technical analysis and applying analysis. We're just reading those patterns.
Think he probably gets that that's the case, which is why he's asked the question.
Great question. I really love the question. So
in our course handbook, we do explain some of the things that we teach in the course handbook.
Yeah, but that's not enough. That's just Stephen mentioned trend lines. Just because you can say the word trend line doesn't mean you know how to draw one.
Yeah, true.
We've got 5 rules for drawing trend lines. We don't teach them in the book. The book ones are so simple.
Yeah.
Anybody can draw that because it's easy to teach in a book. But to teach them in the course, we're talking about dozens of hours of application to figure it out and to really nut it down to doing it properly and really accurately. That's the difference.
Yeah, because stocks behave in different ways.
Yeah. But it's great. I think thanks, Stephen, and go Cats for Friday night. Hopefully we get up Friday night and we get into another grand final. I'm not hopeful though, but better than Essendon, who Janine barracks for anyway. Next up, we do have an email from Jenna who says, "Hi, I bought REA for $165 in June. So since the purchase, the stock has had 10 weeks down. I'm currently 8.5% down. My initial stop loss was based on the low on Friday, the 21st of May at 146, which was a 12% stop loss. Now, the stock hasn't reached this level yet, but it's not looking good. I'm new to trading. I think it's crossed the trend line and I've had a few exit signals based on weekly trend lines. As I'm a new investor, I'm still getting a hold of my psyche. Whilst I am comfortable with the downside of my initial stop loss, is this stock telling me to get out? Love your show, books and all your content. Keep up the good work. Cheers, Jenna."
Do you think it's telling him to get out, looking at the chart? It doesn't necessarily look like it.
No, I think I like this. It's just gone
But
down a little
it
bit.
may have just gone through a trend line though. So, the fact that it could be trading under a trend line increases its risk. But what you're identifying is the fact that when you look at the monthly chart, it hasn't really given anything to tell you that it's going down from a longer term perspective, and it looks like it could be just trading sideways at the moment.
Well,
is what you're looking at,
it is. I mean, the thing is, and that's really where we talk about the art of trading and looking at that. And some people go, "Oh, this has done that." One that really springs to mind is S32. Because that's one I'm trading in my super fund, and it went
reversed
sideways
for 1 week.
Yeah, it was
fell
going
down.
sideways and reverse, and it went seriously goes through a trend line, but it was telling me enough not to get out of it, to go, well, I'm not going to use a trend line to exit it, and this week it's taken off, or the last few days it's taken right off and looking really good. So it's not, so looking at the pattern was telling me to hang on to it.
Yep.
This pattern, it's not telling me it's super bearish right now, but I would stick with your rules or your exit rules and your stop loss. So you said you're happy with that because, as I said a few weeks ago, it really does pay to get used to selling and to take your stop losses, because the more you do that...
But what you're saying is, you're saying if your rule was a trend line, then you would have got out.
Correct.
Yeah.
Correct. So,
just to clarify that.
Yeah, absolutely. You would have got out, and you've got to stick to your rules unless you have better knowledge or you're much more experienced and knowledgeable, which you obviously, as you said, you're not at this point in time, but doesn't mean you won't get there. But well done. Congratulations for getting in the market and giving it a go. I really appreciate, I really think that's fantastic. That's our thoughts on REA Group, isn't it?
Fantastic. If you called into the show and you missed out this week, then you will get another shot at it next week, as we intend to take callers each and every week. That said, the best way to ensure that you get your question answered is still to send in an email, which you must do before 3 p.m. on Tuesday. So if you have been sitting watching the show and thinking, I should ask Janine and Dale a question, then my advice is don't think about it. Just email your question right now to info@wealthwithin.com.au.
I know, there's so many emails we've missed out on tonight we couldn't even fit into the show. Remember, in order to show your appreciation for us helping you by answering your questions and educating you, all we ask is that you subscribe to our channel first and then send the email in.
Well, that is it for tonight's show. We hope you not only enjoyed what we presented, but also received great value from our answers to your questions.
Remember to put the show into your calendar to join us right here live on the Australian Stock Market Show each and every Tuesday at 7 to 8 p.m.
As always, thank you for joining us, and we hope you have a great week. We look forward to you joining us again next week. For now, goodbye, good luck, and good trading.